Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for November 8th, 2013. This week, we're going to talk about time frames and what is the right time frame for you to monitor with your stocks and with the overall market. It's easy to get confused by the market's short or long-term message if you are trading the opposite time frame. A day trader should not worry about the big picture long-term themes. It doesn't matter what the government is doing in the United States or what's happening in the Middle East if you're talking about a day trade. Even the state of the overall economy is not important when you're trading a stock that you're going to be in and out within a few hours or even days. Those are short-term gyrations based on supply and demand and a good deal of emotion. At the same time, a long-term investor shouldn't get caught up in the short-term price gyrations that the day traders like to focus on. When you have a long-term outlook on the market and you maybe hold 10 stocks in your retirement portfolio, you should be more concerned about the big picture themes and not so much about whether the Dow is up 100 points today or down 100 points. It's really all about the big picture for the long-term investor. When you look at a chart, you need to look at the time frame that fits the motivations of your trade. Now we can set up our default chart time frame on Stockscores.com so that it is appropriate for the style of trading that you are doing, and I'll do that for you in just a moment. But first, I want to show you a little example. This is an intraday chart of Air Canada over the last 15 days, and you can see that the upward trend line on this chart was broken on the 6th of November, and you could argue gave a sell signal. And if you were a short-term day trader or even a swing trader, you might have sold the stock at $5.70 when that upward trend line was broken. However, if you are a longer-term investor and you bought this stock months ago because it was breaking out from a rising bottom or whatever, its sentiment stock score went over 60 in September and that was your motivation for taking the trade, well, when you look at it in that context, in a longer-term context, the action on November the 6th was really just a minor speed bump in this long-term upward trend. And if you got caught up in that, you missed out on the fact that that upward trend has continued since the 6th of November. So keep that in mind. Now what I want to show you is how we can set our default time frame up. So you go into Stockscores and just open up any chart. I'm going to open up the chart of Apple. And if you go down below the chart, you will see there a charting tab. And it's at this point that you can set your default chart time frame. So if you are a long-term investor, you might want to look at a weekly 3-year chart rather than a daily 8-month chart. So I've set that up now. I click on Create Chart. And now every chart that I pull up on Stockscores will now be in that longer-term default time frame. And if you are a longer-term investor, that's what you need to be looking at. And when I look at the chart of Apple, I say, okay, it broke its downward trend in July and it continues to be in an upward trend. And it doesn't matter that it went down or up in the last half an hour because that's not relevant. Of course, you can also set up your chart defaults to be an intraday chart, but something to maybe keep an eye on is if you are, let's say, focused on a 6-month daily chart, I can make it 6-month daily by clicking on the fast links, but you want to know whether there's a short-term breakout on the intraday, just click on 1 month and now you're going to see the intraday chart. So what we have at the top of the chart are these fast links so that you can look at different chart time frames and get some confirmations. You want to fit the time frame that fits your trading style as your default, but also still look to different time frames to get confirmations on multiple time frames. When I'm day trading, I like to see a confirmation on the daily. I don't really care about the weekly too much. When I'm long-term trading, I want to see the weekly, the monthly, and the daily, but I really don't care what's going on intraday because that's not a suitable time frame for that long-term trade. All right, let's get into the analysis. S&P 500 continues to have this battle at the top of its channel, and you can see over the last 2 weeks, we've been talking about this, the market is at a point where it should sell off, should see some profit taking, and that started on Thursday, but then on Friday, it bounced right back. So there's a real war going on here between buyers and sellers. I think the risk in the market is to the downside. I think it's more likely to move lower than higher in the short term anyway. But in the long term, that bullish trend remains intact. And so really we should still remain bullish on stocks, just realize that the potential for a short-term pullback of somewhere between 3 and 5% is pretty real. Now the TSX is in the early stages of an upward trend, and in the early stages you're going to get a lot of doubt. This upward trend has been motivated by an improving global economy, by improving commodity situations. But of course last week we got a lot of doubt in that because the US dollar went up, and that sort of hurts that commodity trade. And we've had a little bit of weakness in the TSX, and yet on Friday it bounced back yet again, motivated by the banking stocks, and some of the energy names actually continue to look pretty good. So I am bullish on the TSX, but I do expect there's going to be lots of volatility early in this upward trend because that is how upward trends tend to start. There's always a feeling of doubt. Now the Treasury bonds had been trying to break that downward trend, and for the last 6 weeks had done a pretty good job of that. But on Friday, they broke that cycle of rising bottoms that has been intact since September. And that tells me that the bottom in the treasuries may not be over. Now, what does that mean? If treasury prices are going down, that means interest rates are going up. What happened on Friday was a strong employment number from the United States, and that implies that maybe the US government is going to taper their bond buying programs sooner than later, and that is what caused that treasury bond to drop, which of course makes interest rates go up. That affects regular folks and what they pay for mortgages and that sort of thing. So this is an important chart to watch. Even if you have no interest in US Treasury bonds, understand that this chart really motivates how how mortgage rates act. The Chinese market is in a flag pattern. We started an upward trend in July. We've been trending sort of slightly down over the last 2 months, and that is basically a market taking a breather. If it can break through that red line on the chart, then this upward trend should continue up towards resistance at about 42 on the FXI, which is the ETF that represents China. And generally I would say this is a positive chart that's just in a wait and see mode, and certainly a chart to watch because this is an important market for any commodity related economy like Canada or Australia. Emerging markets, similar situation. They've been building optimism slowly. In the last, say, 10 days, they've dropped, and part of that is because of the strength in the US dollar last week. But I think that this is a chart that's building some potential. It's probably a few months away until we really get an upward trend going in emerging markets. But again, this is helping those commodity exchanges like Canada and the US. Here's a chart of the US dollar, and I've drawn two downward trend lines. One, the sort of the less steep one, is the one that touches more points on the trend. The other one is the one that touches the sort of the relevant points. And the steeper trend was broken last week, but we've come up to resistance at that other trend line. So it's a bit of a tough chart to call. The US dollar has rallied quite nicely over the last 10 days. I think it's probably going to get stuck on some profit taking next week, and that should be supportive for the commodity markets. But I got to be honest, this is a tough chart to call. I mean, big picture, still falling tops, still downward trend, and so we shouldn't doubt that, but it is trying to reverse that. And again, this is on that feeling that maybe the US Fed doesn't have to continue all those bond buying that they've been doing, and that of course would be bad, or if they stop doing that, would be good for the US dollar. Of course, strength in the US dollar has taken gold prices lower, but it still remains in that pennant pattern. We've been talking about this for a long time. Until that downward trend line is broken, the red line on that chart, do not get too optimistic about gold stocks. I have one gold stock right now simply because I think there is a potential here for this downward trend line to be broken, but one is not a lot. And so let's just keep in mind that there is a potential for gold to break the downward trend line, but it hasn't done it yet. And although it's been trying very hard to bottom over the last 4 months, it's got work to do. It has to break that downward trend line. So I'm neutral on this chart, but I think that there is a potential for the downward trend line break. As we get into that pointy tip of the pennant pattern, we're going to eventually get a resolution to this question, I would say, in the next few weeks. Oil is basically taking all of the Middle East turmoil question, which started in July. It's taking all of that out of the market. We're falling back into the trading range that we were in through the spring. We're basically back into that range now. Could see a little bit more downside to support at 2150 on the oil ETF. I would say short term a little oversold. We've fallen down and away from that red downward trend line that I've drawn. So I think this market probably is going to bounce soon. and stabilize. I don't see much upside potential beyond maybe a 2 or 3 day rally on oversold conditions, but I think you got to be on the sort of negative side of neutral. I don't think there's a lot of downside potential anymore, but also not a lot of upside potential. Fear is basically non-existent. The VXX is the fear index based on the Chicago options volatility index on the S&P 500, and it is at its lows and showing no sign of fear in the market. Maybe that's a bad thing. That complacency sometimes can be the reason why markets pull back sharply, but until you see a blip in this, I wouldn't worry about it too much. So to summarize, bullish on US stocks, but with a good deal of caution. Canadian stocks bullish, expect volatility in the near term. Gold neutral, trying to break that downward trend line, hasn't done it yet. Oil neutral. US stocks are showing great resilience despite resistance, but remain risky for a pullback. Canadian markets are in the early stage of a turnaround. Consider pullbacks as opportunities. Gold remains in a downward trend, but is worth watching for a break. Oil is nearing its previous trading range and is likely to find stability soon. Quick reminder, I'm doing some events in Calgary, Vancouver, and Surrey next week. If you are in those cities, I encourage you to come out and pay me a visit. I will be talking about how to identify stocks that have a good potential to beat the market. There's some simple things that any investor can do, whether you are a long-term investor or a short-term day trader. I'm going to focus on some methods that you can use to not only find good stocks, but also manage risk more effectively. If you want to register, these events are free because of our sponsorship from the Canadian broker Disnat. And these events are free. You can attend by simply going to stockscores.com/hot stocks. And on that page, you just register and we'll send you out a reminder email the day prior to the event. Again, Tuesday and Wednesday in Calgary, Thursday in Vancouver, and Sunday morning, which is a Saturday, in Surrey, which is just outside of Vancouver. And hope to see many of you there. Have a great week in the market and trade well.